Welcome back to Ferocious Education. This is Ed. Today I'm going to be covering Roblox IPO. Now, this is a first in this series, and hopefully we'll give another update, so make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on. Let's jump right into this one. So, Roblox, this is an IPO coming up tomorrow on March 10th. However, this information will be still accurate as we go forward, so if you're watching this video after the IPO has been released, you are able to get a lot of information that would be useful to you. So, let's start into this one and start diving a little. So what is Roblox? If you haven't heard, Roblox is basically a gaming platform that works a little bit different than any other game you think of. It basically acts like almost an app store, or let's say almost like an Amazon for all these games. So you can go ahead, you can download, for instance, any of these games. Of course, you sign up, you download them, and you play them on Roblox's platform. So what Roblox has done is, in a way, integrated or given a platform for developers to create games in an easier way without even any single line of codes. And the way they actually realized revenue is that there's in-game purchases into these games, and they take a 30% cut from the money that developers make. And so they have the developers, they incentivize the developers to create these games, and they take a 30% cut. Now, Roblox itself, how it actually goes ahead and takes a cut is through some currencies called Robux. And Robux is currency inside the game that is used to purchase things like avatars, buy special abilities in games, and in-game purchases, etc. And so moving on, so we covered this kind of what Roblox is, the platform that they have, which is actually very smart. They literally are almost an app store for a game, where instead of developing a game such as like Fortnite, where they develop an entire game and they sell the content, control the content, here they let others do the content and take a cut out of it. So a really intriguing method here, or method of development of games. Moving on, I'm going to read quickly here some of the first quarter 2021, and then I'm going to go and explain why it is a direct offering and why does it matter it's a direct offering, and how does it differentiate from an IPO. But before we do so, Roblox expects approximately $1.5 billion in revenue and $2.1 billion in non-GAAP bookings in the year ending December 31st, 2021. So the daily active users currently is 37.6 to 39.6 million, representing a year-over-year growth of around 59% to 68%. Hours engaged is around 8,600 million to 9,000 million hours, representing a year-over-year growth of 76 to 85%. Next, revenue 320 million to 335 million, representing a year-over-year growth of 98 to 107%. Non-GAAP bookings, 550 million to 575 million, representing a year-over-year growth of 120 to 130%. 51 million of one-time expenses related to the company's direct listing. Fully diluted shares count approximately 652 million shares as of March 31st, 2021. This measure is calculated on a treasury stock method basis with respect to all common stocks, etc. For the second quarter of 2021, the company currently expects 34.5 to 36.3 million users, representing a year-over-year growth of 3 to 9%. Hours engaged around 7,600 to 8,000 million, representing a year-over-year growth of -11 to -7%. Again, we're talking about second quarter of 2021. If you remember the second quarter of 2020, that was COVID. And they do talk about it. We headed into 2020, the strong organic growth was further bolstered by social distancing restrictions. As those restrictions ease, we expect the rate of growth in 2021 will be below the rates in 2020. And that's because all the kids were stuck inside. A lot of the people were playing video games, and that kind of boosted their growth. Revenues 350 million to 372 million, representing a year-over-year growth of 75 to 86%. The non-GAAP bookings of 500 million to 525 million, representing a year growth of around 1 to 6%. The full year 2021, the company expects 34 to 36.4 million, representing year-over-year of 6% to 12%. Now that's again users. And then there is a little bit of a shrink around to 29,800 to 31,400 in terms of hours, which hovers anywhere between -3 to 3%. And revenues is around 1.4 billion to 1.5 billion, representing a year-over-year growth of 56 to 64%. And non-GAAP bookings around 2 billion to 2.1 billion, billion, representing 6 to 13% growth. And then non-cash provided by operating activities, net cash, that would be around 320 million to 340 million, including 51 million of one-time expenses related to the company's direct listing. So there we go. We have a little bit of an insight towards their full-on earnings that is anticipated for 2020. Now, if we were to take a look into 2018 to 2021 estimated the hours engaged, we're looking back from 9,400 and 14,000 in terms of hours in millions. And if we're looking here in terms of 2021 estimated, the forecast is still quite on par with 2020, which 2020, to be fair, had an insane boost. So as long as they're maintaining it, that's a good thing we're looking at. Bookings, you're expected higher bookings in millions. In terms of daily active users, you're still expecting 2021 estimated to be higher. And in terms of net cash provided by operating activities, that is still half or almost half than 2020. But in terms of 2019 and 2018, that's still 3 times more. In terms of revenue, you're still seeing a really good amount of revenue compared to 2020 from 2021. So as you get to see here, 3 months ended anticipated revenue for March 31st, 2021, that'll be 328 million. In terms of June 30th, 2021, that will be 361 million. And in terms of the total year, that will be almost $5 billion. And then before moving on towards direct listing, public listing, we're going to go a little bit towards some of their presentation or SEC filing information. They have 22.2 billion hours engaged, around 589 million in revenue, and $1.2 billion in bookings with around 345 million operating cash flow. These are all the metrics for 9 months ending September 30th, 2020. Moving on, a bit of information about the developers, etc. Nice stuff, but not really so much interested about that information. There's some kind of pictures and video games, etc. Now moving on, here's the table of content. We're able to see a bunch of things, including things as a summary of their technology, what their current anticipations in terms of the platform, etc. I already covered a lot of the users' information about the anticipations of current users, etc., and how much they're growing, but I do want to cover their technology. So in terms of their technology, they have 3 main technologies. They have Roblox Client, which is the application that allows users to explore 3D digital worlds, and then you got Roblox Studio, which is a toolset that allows developers to create, to build, and publish and operate 3D experiences and other contents accessed by Roblox Client. And then you got Roblox Cloud, which is a service and infrastructure that powers the human co-experience platform. And they've been founded, by the way, in 2004, so they've been here for a while. They're not just something that blew up overnight. And they do go ahead and talk about their growth strategy. So for growth strategy, it goes under platform extension. And you see they're continually investing into the Roblox platform, including significant investments in high-fidelity avatars, more realistic experience, 3D spatial audio technologies, and other social features. These investments should enable Roblox to support human co-experience in the entertainment, learning, and business markets, age demographic expansions. As a result of the platform extension, developers and creators are now able to build higher quality experience and content that appeals to an older age demographic. We believe that this is significant potential for us to increase our penetration to the engagement across all ages of demographic. International reach. We believe there is a significant potential for us to grow in a global reach of our platform. We believe that some of what will occur by the same organic word-of-mouth growth of users, developers' growth, that we have seen in the markets like the US, Canada, and the UK. In addition, we are investing in technologies that will enhance our growth around the world. Monetization. We believe that there's a significant potential to increase monetization on our platform. First, we are actively working with our developers and creators in the community to help them improve their monetization. Second, we recently introduced our subscription service, Roblox Premium, which we believe will increase our conversions of our free users to play users and retention of our paying users. We expect to work with leading brands to build unique marketing opportunities on the Roblox platform. And then you got risk factors here going on as well with different rules, regulations that they abide on. Now, taking a quick look into their 2019 9 months ending September 30th and 2020, Yes, their revenues has increased, yet their net loss has increased quite substantially, mainly due to different factors, including, for instance, infrastructure and trust and safety that almost tripled, or actually more than tripled. Oh yeah, almost tripled there. In research and developments and the rest didn't really substantially grow. Now, research and development, yes, grown multiple sizes, around double there, general administrative as well. But generally speaking, they have a bit to do in terms of their balance sheet. Moving on, we're able to see other risk factors, some of their histories, profitability, but just a quick thing, because I did go ahead and read through this. Their current revenue comes around almost 5 cents per user, which is lower than a bit of the gaming industry there. So they have ability to increase that a little, especially with Roblox Premium, as well as their current retention. We generally recognize revenues from users ratably over the age of a lifetime of a paying user, which is for the years ending 31st December 2018 to 2019 was around 23 months. Therefore, much of the revenue we report in each quarter is the result of our purchase of Roblox during previous periods. So consequently, a decline in purchase of Roblox in any one quarter will not fully be reflected in our revenue and operating results for that quarter. As such, any such deadline, however, will negatively impact our revenue operating results in future quarters. Accordingly, the effect of significant near-term downturn in purchases of Roblox for a variety of reasons may not fully be reflected in our results of operations until further periods. What they're talking there is a delay because of how they operate their company itself, on where the revenue decrease or increase is reflected. Now, a quick key things. This one here, if you perhaps have been following it, it was actually supposed to go public. So I think, yeah, there you go. Roblox's path to direct listing wasn't straightforward. In November, the company initially filed to go public using a traditional IPO. Then in December, it delayed the offering after some strong debuts of Airbnb and DoorDash made it too difficult to determine the right price for the share. Roblox in January changed its mind about the traditional IPO, choosing to go through a direct listing. I'll explain a little bit further on there. But just a quick highlight. Roblox was actually founded in 2004. Roblox hosts child-friendly games focused on digital characters resembling Lego blocks. An average of 37.1 million people come from Roblox daily to play the game. The company is not actually profitable. Losses widened to 253 million for the year ended in December 31st, compared to 71 million losses in the same period for 2019. Revenue rose nearly 82% to 924 million for December 31st period. It has 960 full-time employees. Roblox co-founder and CEO has, Roblox co-founder, president, and CEO, he has around 70.1% total voting power. Now, there's actually a lot of talk about this lockup period for Roblox, and I think that's actually quite a little bit misleading, because a lot of people are referring to this actual SEC filing, which is in November 19th, 2020. At that time, they were thinking of going as an IPO. And yes, there is a lot of mentions about the IPO, the 180-day agreement, etc. But a big difference between an IPO and a DPO, a direct public listing, is that a DPO does not have a lockup period that applies to an IPO. And so, in all technicality, the insiders can dump all their shares on day one. But most likely, that's not going to happen. But that's one of the disadvantages of direct listings. But what about some of the advantages? A direct listing allows private companies to sell shares to the public without intermediates. So the company makes a certain number of shares available to the members and of the investor public to purchase at a set price by negotiating between the buyer and the company, according to Stanford Law School. Once the shares are sold, the company's fluctuating stock price becomes available to anyone who wants to buy or sell it. The advantages of a direct listing are straightforward. The company provides a liquidity to investors, which includes capital providers and some of its employees, without paying millions of dollars in fees to an investment bank. Direct listing also allows the company to avoid lockup periods that bar insiders from selling their shares, often somewhere around 6 months. The disadvantages of direct listing can be significant could be significant or irrelevant depending on your company. To be sure, if you do a direct listing or an IPO, you will need to pay lawyers, accountants, among other professionals. If your company is well known by the public, you don't need to raise new capital to keep your business afloat. So a direct listing might be a good route with a few disadvantages. However, if your company is not actually well known, that will be a different path. Now, let's take a quick look into some of the companies that went through this direct listing, including Spotify, including even Google, Slack. The list goes on here, and that doesn't sound like anything that would be off a sense that is a withdrawal or something negative. In fact, it just shows that perhaps Roblox doesn't have a capital raising issue. They're fine as they are, and that's a good thing. So that kind of sums up a little bit about Roblox and a little bit about direct listing. And this, by the way, for direct listing, it gives us a little bit of an insight that says, you know, institutions might not have actually bought through this into this at a substantial amount. So on the opening, probably institutions are also going to look to pick up some of these stocks, because an IPO, it's easier for institutions to buy an IPO rather than a direct public listing. And a direct listing gives retailers a good advantage over IPO. So it comes to the question to Ed, what do you think about this one? I've seen the younger generation loving this Roblox game. I've heard about it so many times. I myself don't play it, but it looks to be like an addicting platform. And they are looking to increase their demographic. Yes, they're not profitable, but I do see this one happening to be almost a meme stock. A lot of people are interested into this one. And for me, I'm going to enter it into more of a speculative play, where I'm going to go in with a small percentage of my portfolio and leave it there for the next 2-3 years to see what happens. Now, I just might do that, depending on the price action. If the price action is very strong and it ends up doubling within a couple of days, I might go ahead and realize my profits, but my plan is to enter at opening. What do you think about this DPO? Make sure to subscribe, leave notifications on if you'd like to join our Discord. It's in the description below, and have a wonderful day.